All right, so we're going to call this a weekly recap, episode 76. I've done a whole bunch of these. For those of you who want to check the progression of Robert's trading over the last 4 years, you can check it out in the YouTube channel, Rivera Trading Group, where I just made public a whole bunch of weekly recaps that I've done. Again, this is number 76. So I've done a whole bunch, and you guys can check out a slew of them, maybe 45 or so that are there. And you can see the consistency of the break and retest. I mean, through the years, it's just consistent. You'll be able to see it. How 4 years ago is working, 3 years ago is working, 2 years ago is working, 1 year ago is working, and is working now. Okay. What I've added to all of that is the supply and demand and how to take the retest of it and when it's a higher probability. And we're going to see those today on how some are higher probability than others. So this is gold beginning with the 25th. This is last Monday. And let me make sure I got I got everything here. If I get interrupted for any reason, or if my communication breaks down or something, make sure to get my attention by opening the mic. So here we have a very classic, as we know, break of consolidation and a break to the upside before our session. All right. If you go to the 15-minute, you're going to see a very clean demand setup right here, which is why I have this marked from all the way up here, is because in the 15-minute, this whole area is an area of demand. Now, what I did so that we could remain honest in this process is, okay, I marked a winner on at the demand area or the supply area if it would have paid on a pending order, right? And then also if we waited for a confirmation candle. Okay, so I got them both marked. Okay, you're gonna see how some of them would have been winners if we took it at the pending. Some pendings would have been losers. And we're gonna make an analysis as to what is the best approach. Now, I don't have enough trades to make that determination because between London, just London alone, we're talking about only 12 trades. We need a whole bigger sample than that. But as we accumulate these, you'll be able to gain confidence in how to take these. You're going to find that sometimes waiting for the confirmation makes it too late for you to make a profit. Also, by the way, if it paid better than 1-to-1 and then returned, then we're going to call that a break even. I expect that nobody will have a loser once it has gone at least 1-to-1, because depending on what you're risking, if you're risking 2%, that 1-to-1 is already a 2% gain. So it's completely up to you. That's where you have your own discretion. But here we have price broke out. We have a gap, right? And again, beautiful. This is exactly how I like to see it, how it leaves a gap. And then when it comes back, it leaves the gap open. That tells me that orders are being accumulated just to be taken in just a minute. So I'm waiting for the return. Here's the return right here. Okay. So the moment that this touches right here, the pending order would trigger stop loss. This is gold. This is GBP USD. Okay, this is GBP USD. So GBP USD, I only have 2 pip stop loss. Buffer, okay? Buffer below 2 pips, all right? And 2-to-1 is the goal, okay? To always get 2-to-1. All right. So here you have a win at the bottom, win at the top. Very clean, very easy. How could I have lost this trade? Well, as I'm looking at it, there is no way that I could have lost this trade. The only way I could have lost this trade would have been, and even then I could have possibly won it, would have been to go for a sell on this right here, right? To go for a sell on that right there rather than wait for the buy. But the truth of the matter is that even if I waited for a sell here and waited for the confirmation candle, I won. I won on that, right? I would have known to take profit here, okay? But the reason why I wouldn't necessarily be looking for that is because I have a change of character over here, all right? So this bullish move tells me change of character that it's likely to keep going up. So I'm looking for buys. Again, notice that if we would have taken a sell here, After the confirmation, we would have won. Had we taken a sell here as a pending order, we could have probably lost. Let me go take a look at it, because it depends on how many pips are from here. Well, from here. Hold on. Let me change this. Let me adjust this. Would have been there. Okay. Change it from there to there. Look at that. That's only 2.5 pips. So we would have lost by 0.5 pips if we would have used a 2-pip buffer. All right. And of course, you also have spreads, although on GBP/USD, most of the times you don't get any spreads, which is why I'm only using 2-pip buffer. All right. So that's one way I could have lost if I would have taken a pending order there, but I would have won on a confirmation candle to the bottom. But in any event, because of the change of character, I'm looking for buys, waiting for it to come back. There it is, beautiful buy and win, okay? Let's go to New York. I did both New York and London so that we can gain confidence in this, okay? We have a breakup structure during New York. That breakup structure left a gap right here. Let me open it up. I hate when this is really busy. Gap right there. And if you took it as a pending order, you won 2-1 because it would have been something along the lines of the entry would have been down here. Okay. And the 2-1 would have been there. Okay. So obviously you would have won very easily. If you waited for the confirmation candle, which is this candle right here, okay, then you would have had this as an entry and you would have never gotten your 2-1. Okay. But it went so far up. Look at this. It didn't hit your 2-1 by 2 pips, 2.6 pips. All right. So it's just a question whether you're taking profit or not. I'm just calling it a break even just in case. Okay. Moving on to the next one. This is Tuesday now, right? Is that Tuesday? Yeah, Tuesday the 26th. All right. We have a breakup structure to the bottom. All right. And we have a gap here. Now, here's why I put this question mark here. This is one that I probably would have not taken because this is the low and this move up and this consequent move down did not break structure. This move down did not break structure. All right. So since this move down did not break structure, it's likely to continue moving up. All right. So it's not likely one that I would have taken. I marked it as a win because it was a gap, right? It was a gap that got mitigated, but this is not something I likely would have taken. All right. I need to see that breakup structure. And look how when it came down to break the structure, it couldn't. Okay. It held and it held. Okay. This is the only one from this night. And so that's the only possibility trade I could have taken. Let's see. How could I have lost this trade? Potentially the way that I could have lost it. I'm looking for any possibilities here. No, not there. This is a gap, but not a clean setup for a supply. So this is the only potential trade that could have been taken that evening. Very late in the night also. And given that it didn't break structure, see, this broke structure, but when this broke structure, it left a gap, but it wasn't clean here. This is not a high probability setup for a supply setup here. All right. So I wouldn't have taken that. I would have wanted this to create a new breakup structure, breaking this structure in order to take it up here, but it didn't. Okay. Let's go to the next day. Oh, New York now. During New York, we have a downtrend that's breaking structure as it's going down. And we have a supply that was left here and a supply that was left here. This is the ultimate breakup structure that left this gap, right? Because this left a gap, but it never mitigated. But this breakup structure here left a gap, came and mitigated, and this would have paid whether you had taken it as a pending or whether you had taken it as a confirmation. Now, on this one, because this was higher over here, I'm very likely only to take this as a confirmation, okay? Because there's the possibility that this could still come up here. So I would have had a pending order up here, waiting to see if it came up there. And if it didn't come up there, then I would have been observing to see if this rejected. Once it rejected, entry would have been there, and a 2-1 would have been attained on that one, okay? Let's move on to the next one. Okay, we have consolidation, you have break of structure, we have an impulse move, you have a gap. This gap would have paid whether you take it here or whether you take it right there. If you notice, let me move this out of the way. Oops. Move this out of the way. There you go. If you notice, this is a bullish candle, but it didn't break above. This is a bullish candle, and so the break of that high will be entry. All right. And so it would have paid you 2-1 no matter which one you took. Okay, so that's pretty good. So far, so good. Okay, now this is New York, and I wanted to mark this for the very same reason that I talked about the previous one over here that did not give us a break of structure. This one down here pulled up, left a gap, and when it pulled up, left a gap, but it didn't break structure. There's no structure here that it broke. Okay. So I would have not been looking to take this buy here, even though when it came down, maybe it was a successful rejection and move up. I don't know, but I'm not looking to take that because it didn't break structure. I'm looking for a break of structure. Now, this move up breaks this structure, right? Cleanly, it breaks the structure. And when it does, afterwards, it leaves a gap, comes and mitigates the gap. It will pay as a pending order 2-1, but it didn't pay. It would have been a break even because this came all the way up here, and that came within 1 pip from hitting TP. It didn't hit TP by 1 pip. You could call that a winner if you want. I mean, technically speaking, but really, if you're asleep waiting to win that, you woke up to find out that it hit your break even. Okay. That was Wednesday. Let's go to Thursday. Thursday would have been the last day really of trading this week. I think I marked Friday anyway, just in case, because Friday was Easter. So here we have the rejection of this major supply up here. This is higher time frame supply where it's rejecting from. It broke structure here. When it broke structure here, it left a gap there. Now this got mitigated before our window, but the rejection break didn't come until our window. Okay. So you can see how my entry is here below the air. Okay. And then if you had taken this as a pending order, and you would have had to been up earlier to catch this as a pending order, but it did pay as a pending order. Okay. Within our window, it paid on the break of the low, it paid 2-1. Beautiful. It paid more than that. Obviously, look at that. Paid a whole lot more than that. Okay, so that was Thursday and Friday. Although again, it's not this is still Thursday in the morning. Thursday in the morning, you have the move up. You have a break of structure here. On the break of structure, it left a gap. Left the gap, got mitigated, paid on the pending order, or whether you had took the break of the low, it kept dropping until it hit TP down here. Okay, it went up like almost to take you out, but it didn't, and it didn't. It could have been perhaps a. Let me see. Let me check this out. Check this out. Yeah, I guess that would have been a break even then. Let's go ahead and eliminate that from there. Let's go ahead and eliminate that. Change that. That would have been a break even. Oops. Just staying honest with this thing. There you go. Oh, can't see it. There you go. Okay. That's a break even. If you didn't take profit, obviously, because it came all the way back to entry. And even though it stayed within the ranks and eventually paid, very difficult to hold that, right? And I would have, wait a minute, time out. Oh, there's only one trade here. Sorry. Yeah, there's only one trade here. This one, because you wouldn't be in the market. Let me see. Yeah, you wouldn't be in the market at the break of the low. So that's that. Okay. All right. Now Friday again, not a tradable day. Look how the market moved. Look how choppy, how these big gashing moves happen suddenly, okay, unexpectedly, without continuation. It would have paid you, but it's not tradable. It's not something I would trade. Okay. That's Easter Friday. And same thing here. This came and mitigated beautifully this supply that I left up here. Beautiful, right? Perfect. Wonderful. Beautiful. But I did not count Friday in the numbers. Okay. So looking at GBP USD, the numbers for GBP USD during London, where all the pending orders won, okay? And all the confirmations won except one that didn't offer an entry. So that was a perfect 100% for GU during London. And then during New York, we had 5 wins as pending, and you had that's including the Friday, which I don't count. So let's call it 4 wins for every day, basically at one. And then on the confirmation, it had 2 break evens and 2 wins. So no losses on GU for London or New York. Let's go to gold. Gold is very similar to GU. Okay, so we have a now, but this one did provide a on the first break of structure here. When it pushed up, it broke structure, leaving a gap. And look, go left a little bit, and you can recognize why I'm not looking to look for any of these cells potentially. I'm not looking to try to catch like these rejections up here. I'm not looking to catch those rejections down there because it has come into this area of demand. Okay. It has come into this area of demand and it is rejecting. So I'm looking for potential buys. There's a gap. Here comes the mitigated gap, and it paid whether you entered on pending or whether you entered after confirmation. Then you have New York moving up, moving up, moving up. Okay, break of structure, gap, pending, paid you, and confirmation almost paid you. Did not paid you by 14, 15 pips out of 60. At the 65 pips, it didn't pay you because of 15 pips. So it's up to you. But again, I would call that break even. All right. That was Monday. We go to Tuesday. We have a break of structure to the downside. We have a break of structure to the, let me see, hold on a second. Uh, we do have a break of structure here, but it's not our time, right? So, and if we entered into a sell here, we would have won that. We would have won that as a pen. Either one, we would have won that. But I'm not looking for that one. I was looking for a buy here once it broke that structure. Broke that structure, change your character on the higher one over here. You have a win here, and you have a win here, no matter which one you took. And if you, again, and if you happen to have taken a sell here, you would have also won because the the what is that? That's all of 7 pips, and it went 20 pips. So you would have had it better than 2-1 here too on the sell to the bottom, but I didn't count that. I just counted the buys. Okay. Let's go to New York. As it keeps going up, kept going up, kept going up, kept going up, kept going up, finally starts breaking down. We have a gap here with a break of structure, did not get mitigated. You have a break of structure here. You have a change of character here. And the reason why this is a change of character is because breaking this last move up, it is breaking this. So now we're definitely selling. All right, comes, mitigates that, pays perfectly on the pending, pays a whole lot in the confirmation. Either one would have paid you quite significantly on that one. All right, going to, this is now Wednesday, the 27th. And this one lost by a hair, but it did lose. This is gold. So you would have had some level of spreads here that would have taken you out on the pending. But once you have your confirmation, let's look at the candles so you can be assured. Okay. This candle, let me move this out of the way. This candle did not have a break of the high. This candle did not have a break of the high. This is a bearish candle. So this is the first bullish candle that breaks the highs. That's entry right there. Stop loss goes immediately below that. And you have a massive win, right? This is a massive win to the upside. All right. So that one, the pending would have lost and the confirmation would have won. Okay. Now we have continuous move up, continuous move up. Finally, you have a big move down that breaks character, right? And it breaks character because it's the last push up, breaks character. So this is looking for sales now. Obviously looking for sales after this big massive gap. Comes back, mitigates it just in time, just before New York was over. Comes and mitigates it. Whether you took it here or whether you took it here. Here you won cleanly, a 2-1. And because 2-1 again would have been something like this. All right. Just so you can see it. Okay, there you go. So obviously that's a fast, immediate win. But if you took it down here as a confirmation, then it would have been a break even, because even though it came better than 1-to-1, there you have your 1-to-1, it came back. Okay. So that would have been a break even on the New York. Big massive move up here before London. Nothing to do, nothing to do. Waiting, 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 waiting. Big drop, right? Leaving a gap behind. Let me see this. Let me see this. This is a tricky one. I don't see this. Yeah, this would have not. I'm not gonna consider this a win. This is Thursday, the 28th. I'm not gonna consider that a win because it didn't break structure, right? It has to break this structure here. And it didn't break structure. Well, not until it came all the way down here, but then this would have not been active. Okay. This would have been the trade here that would have paid us over here. So let me see if this would have paid us. Hold on. Let me move this out of the way. Let me check this out. Let's see. Could we have won this right here or lose it? Let's see. Okay, so this is 9.8 and this is gold. So we're looking at 4 pips. 4 pips, that's 13.8, 13.8. Okay, on 13.8, we would have lost. Move this out of the way. On 13.8, on the pending, we would have lost because it would have taken us out there. And on the confirmation, very likely we would have won. Let's see. Stop it goes right above it because of that's a rejection candle. And this one would have won. Okay, that would have won a 2-to-1. So let me move this out of the way. All right. And what day was this? Let me fix this. This is the 28th. 28th. We have it. Oh, I might have marked that already. We have an L here. And then we have a winner. Okay. All right. All right. Yeah, that was 20. Okay, 29th, no trade. Oh, well, this is still New York. This is New York. So here you have another example of why this gap right here is not taken because it didn't break structure. Okay. It attempted to break structure. It didn't break structure. Okay. When it went up, no potential trades here. On price action, you could have taken a sell here, right? If you're considering this as supply, you know, because it dropped so hard and you have a bearish candle, you could have taken it on price action, but we're not doing that. You know, I might have been bold enough to take it, but it's not something that I'm encouraging people to do. So it never broke the structure and never changed character, right? Then when it finally broke structure, it did not break character. Look how it held. And this is important to notice because again, this is how price action moves around structure, which is what my emphasis is for you guys to learn is how price moves around structure. When you notice that it doesn't break here, it's not time to take a sell over here. It's likely that this is going to keep going up. And then when it does break, it respects down here. Okay, this is also another sign that this is going to keep going up. Okay, so again, no trade there. And that was on the 28th. And then we'll go into the 29th, which again is not an advisable day to trade. So, oh, there was nothing there on the 29th, right? Because gold was closed. So gold was closed. Okay, so having changed those numbers, then for, let me see. Yep. Let me see, confirm again. Just want to make sure I got this right. Yeah. So gold for London was 2 wins, 2 losses as a pending. All the confirmations won. Well, I don't have, yeah, this is New York. All the confirmations won. And for New York, we have 3 wins, no trade, break even, win, break even. So it seems like it still works better for London gold, but it's still you didn't incur. Let me see, you did incur this loss here, but that was yeah, that's a London loss. So there were no losses during New York. Is that correct? Yeah, there were no losses during New York. Okay, let's go to the last one. This is GBP JPY. GBP JPY. Again, this is the 25th, and you have a break of structure with a gap, so expecting this one to be taken. All right, and it lost as a pending order. It lost as a confirmation candle. There is nothing to be taken here because it closed above supply. Okay. So even though this, if you had taken this to the downside once it broke, you would have won. This is not a trade, okay? Because it broke here. So once it breaks this structure, it broke to the bottom, but then it broke to the top, right? And since the latest one is it broke to the top, it's likely that price is going to keep going up. So now we're looking for a buy, but there was no potential entry here. So it's only an L here with no entry on the second trade. Now we go to New York. During New York, we have a continued push up, push up, push up, push up. We finally have a break of structure. We have a gap left behind. We have a mitigation here. And this would have lost no matter what. Let me see. Well, it would have been a break even. Had you taken the pending order, it would have lost if you had waited for the confirmation candle. All right, because it was bullish. Perhaps the best way to take this would have been to wait for the bullish move. But it does fit the criteria that it broke structure to the downside and left the gap. And so it would have been an attempted trade for sure. All right. So that was Monday the 25th. Now we go to London. This is kind of a consolidation, but it is moving up. All right. Then we have a break of structure here. Oops. You have a break of structure there. Let me move, see if I can move this out of the way. There you go. Break of structure, gap, fill the gap, and look how it wicked above, but the buffer of 3 pips. This is GBP JPY, so this is a buffer of 3 pips held, okay? And it would have paid you there, and it would have paid you here too, no matter which one, because entry would have been actually higher than the pending order one, would have been up here, okay? All right, and then we have, during New York, we have a break of structure to the downside, similar situation. We have a gap, we have a confirmation candle, and we also have a pending order that got paid very well, okay? Let's go to, what is this, Tuesday? During Tuesday, beautiful gap, right? We saw something similar in, I can't remember if it was, I think it was GU, something similar to this in GU. Beautiful, right? No matter which one you use, and this one paid a whole bunch. This is the kind of day you want to maximize this kind of drop if possible. There was no way of knowing that it was going to break through here, right? This would have been probably the last point of interest here. At least a partial profit should have been taken there. Look at the rejection in that area. It rejected really hard up before it finally broke and came down. But that was a big, massive win. Okay, then for New York, we got 2 losses here for New York. No matter, well, it's not 2 losses, it's 1 loss because it depends on how you took it. But whether you took it, broke the structure, left a gap, it lost as a pending order. They had no continuation, and it lost also if you took the break of the low because it broke the low right there. Broke the low right there, and it had no continuation. So that would have been an L. Okay, again, it's not 2 losses, it's just 1 loss. It's just pointing out that the pending and the continuation would have lost also. All right, now we're in Thursday. Break of structure, gap, perfect, beautiful. No matter which one you took, you won on that one for London. Then during New York, you have break of structure to the upside, gap, waiting for mitigation. Mitigation came. It would have paid you as a 1-to-1, but it didn't have any continuation to the upside. And there was no entry. If you were waiting for the break of the high, there was no entry in your window of time. Okay, so only a break even here for the pending. And we go to Friday, which would have not been a tradable day, but just showing you what happened. Break of structure, gap, mitigation, perfect paid. And during New York, it would have paid you if you would have done a pending order. But again, not tradable. Oh, by the way, GBP JPY is the only pair that I would trade during a US holiday. Okay? It's the only pair. It moves. It does move. The only thing is, I'm up for 3 potential setups, hoping to catch 1, right? And if GBP JPY is the only available one, I'm not gonna be up all night just to see if that works when it's a holiday, okay? But it is the only one that actually can move, okay? So that was that. And so GJ, out of 4 trades, not counting, well, because it is the one that could be traded, let's count it. Okay, out of 5 potential trades, lost 1 on pending. Out of 5 potential, this is London. Out of 5 potential trades, won 4 and had 1 no entry. Okay, so that's a perfect score, except for, again, pending did have a loss. And then during New York, the record is a little right? Because it had a break even and a loss, win-win, loss, break even, no entry, and then win and no entry. So basically, 2 wins, 2 break evens, a loss. As a pending order, 2 losses, 1 win, and 2 no entries as a confirmation candle. So any questions related to any of that? I wanted to show you, first of all, the consistency of the setups, how consistent they are, how you could, I mean, on some of these, there's no way you can mess it up. This is what I'm getting at. When you have something like this, right? When you have something like this, what are we waiting for? We're waiting for it to come back over here. That's it. There's nothing else to do. Okay. And if you're waiting on it as a pending, you won. And if you waited for a confirmation, you never got a confirmation on this one, right? This is the low of this, and it never broke below. So there was no entry on that one. Okay. On this one, what are we waiting for? We could look for a bullish. There is no bullish entry here. I mean, there's no bullish setup, right? But we have a bearish setup. Come back, retest it, pays beautifully. Okay, let's look at one more. Okay, on this setup right here, obviously bullish, 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 bullish. It even came here and bounced from this gap, pushing up. So what are we looking for? We're looking for a buy, obviously, right? Broke above. This would be the entry. Were there any sells here? Potentially, no. There's a fair value gap there, but not a setup, not a supply setup. Not a supply setup, not a supply setup, nothing. So it's pretty clear how to see the setups, and it's very difficult to mess them up. It doesn't mean that we're not going to mess them up. Sometimes it's not going to be so easy to distinguish which one we should take. On those days, it's probably best to wait for the confirmation candle. All right. But whether you take the confirmation candle or you take the pending order, when their setup is there, take it. And if you feel that it's a higher risk that it may not work, lower your risk. That's all. Okay. Any questions related to any of that? Because that's it.